Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stocks for Breakfast. Today we're going to discuss an answer to a question that we get quite a bit, which is how do I hold my good trades longer? And recently we've done some videos on reading order flow. We've done some videos on moving averages. We've done some some momentum videos. Today what we're going to do is we're going to go old school a little bit because you'd be surprised how many questions that I get about is now the right time to buy? And the second part is obviously, if you held the trade long enough, how do you know when it's the right time to take profits? Well, I just want to touch on that last part a little bit. There is never basically the perfect time that you'll know before you get into a trade, unless you're looking at a trade that's going into, let's say, an obvious resistance level where you can clearly look on a chart, it goes up there, and you say to yourself, when it gets there, that's when I'm getting out. The stop loss side of the market is very easy. You could look at that and be like, all right, if it's there, if it clicks through there, I'm out of the trade. However, I guess the common question or the common disappointment, for lack of a better way of putting it, is when members of the community, when members of the boot camp have a winning trade, book the profit in the winning trade, and then that trade continues to go. First of all, that's a great problem to have. If the biggest problem you have is when to book your winning trades, congratulations. By the way, if you find these videos helpful, definitely click down and subscribe. But here's what I want to get across. Because nobody can see the future, you have to use certain points of data or even points of P&L when to book your profits. And for me personally, there's usually two that I look for. I usually look to the left, and this doesn't matter if it's a day trade or a swing trade, is I look to the left and say, and I want to know, what does the stock normally do? Now, on an intraday basis, we'll kind of get a feeling for that with the average true range. So if a stock normally goes, I'll just use round numbers. If it normally goes from low to high over the last 14 days, and let's just say that's $2, and your stock has now already gone $2, the question I get all the time is, what do I do now? And I give the same answer all the time. When a stock does what it normally does, what I will generally do is move up my trailing stop loss. So on a profitable trade, I'll move up my trailing stop loss. So let's say it got up to $2. I'll move it up to, let's say, $1.75. And let's just say, for argument's sake, I have 1,000 shares. Again, just for the sake of this discussion. What I'll normally do is I'll put 70% of that trade up at that level, assuming it's a day trade, and we're going to get to swing trades in a second. And if it pulls back, I'm okay with booking profits on 70% of that, just as a general number. The other way to do it is I will maintain the position, because there's an argument on the other side is, if you want to get out of the trade, just get out of the trade, right? If you feel like there's a reason to get out of the trade, you should just get out instead of giving back some profits, right? And the other side of that is I'll use a dollar amount. So in other words, if I'm up $3,000 on a position, I tell myself I'm not letting that go lower than $2,700, because I invested X amount of money in the trade, and now I'm up X percentage on that trade in a very short period of time, which is very easy to do if you happen to be using leverage. I tend to book the profit. So again, the circumstances matter. And again, this is a part of us learning how to do tape reading together, where you build the argument for the trade. And then the other part is you just let it run. But we don't know what let it run means, especially in today's algorithmic world, and especially if you're day trading, where these computers have orders flying all over the place. You could be in a position at 3:45 in the afternoon where the market has 15 minutes to the close and feel really comfortable, and then like that, all of a sudden it reverses and you lose 40% of what you were just up 5 minutes ago, because sell systems come in and what are called market on close orders. So it's not really cut and dry when you should get out of a winning position. There's a lot of different ways. And the other way is to use a trailing stop based on a percentage. So if it goes all the way up to a certain number, and you say, okay, if it pulls back X percentage, that's when I want to get out. Or you could use a dollar amount as far as the stock. You could say if it goes up, if it went up $2, you could say if it pulls back 40 cents, that's what I want to get out. So it's not a simple thing, but obviously it's awesome. If that's your biggest problem that you're worrying about right now, that means that you're doing a good job of picking your ideas out, which is actually what I want to do now on both the daily and the intraday charts. I'm going to do an example, a couple of examples of going old school and drawing trend lines. It's easily one of my favorite things to do because you literally get in there and work the chart. So this will help us do two things. It'll help us do, number one, get clear on which side we should be trading on. Number two, helping us determine what some good levels would be to buy a particular stock. And number three, actually there's four things. Number three, all in trend lines, crazy, right? Number three would be understanding when that trend has broken. In other words, should we stop trading in that direction? Should we consider taking profits? And number four is, if the trend line does break, how do we know what it should look like if the trend completely reverses versus it was just a pause in the trend and then we take off? I know it's a lot to talk about, but really, it really comes down to drawing one trend line, drawing it correctly, and then knowing what to do after that. So we're going to head over to the charts, and we're actually going to use Microsoft to start out as the example. So you can see a lot of the stocks that we're talking about actually had obviously a solid bounce off the lows in March. So what you do is you start out with the lowest low and you draw a trend line up to the highest low without going through any prices. So that's basically right here, right? So this area here is what we want to discuss. We want to discuss whether or not this is a change of trend or whether or not it is simply a pause. So you have where it broke, and then you need to draw the highest level prior to where it broke. So what you'll find is a lot of stocks will go into what is the box. And in the course, in the order flow masterclass that I teach, this is known as a potential change of trend. We call this a PCOT. And this is really the area where a lot of traders they look back and get angry at themselves that, oh, I got out of a trade when it never really moved against me. This is perhaps the simplest way of doing this. Once you understand how to draw the box, draw the trend line, now there's really only one thing that can happen. Well, two. It could continue, or it can confirm this change of trend here. So really, what are we doing here? We're really basically just sitting in this stock if we're profitable from these lower levels, or if we're looking to enter a new trade. Only one of two things can happen. It could break down, and that would confirm the change of trend, or it could break out to the upside, and this is a continuation pattern. Now, there are certain clues you can look for, and during a pause, you always want the pause to be on lighter volume. And this volume is actually pretty much steady across the board, although you can see for the most part it was below the average. But we're not going to talk about volume today. It's a whole separate video. So what ends up happening is you draw that, and now it breaks out to the upside. So what do you do next? Now you have to redraw a trend line to the new levels, which is essentially here. So we started out at the same spot again. We went through and did not cross any price action. And now you can see Microsoft, in this case, has actually broken the trend line. Not broken it by a lot like it did over here. It didn't go through for a few days, but basically once. So what do? We move our trend lines back over here, and we have a new box in Microsoft. And this is how you decide very quickly how to hold your good idea. So now Microsoft is in a box. If we were trading together, I would say it's in a box between 216 and 203, and until it gets out of that box, I'm not going to make a new decision on the stock. If it breaks down, that will be an area to get out of the trade. If it breaks back to the upside, you would continue holding it. So this is a really old school, non-technical, non-computer driven way of determining, do you still want to be in the position? There's a couple of other trades that we could look at in stocks that were really strong. And I wanted to point this one out here, because the original trend line that we drew went kind of parabolic. It started to move much quicker. So we actually drew a new trend line. And then from that new trend line, we had a break. And now this is where traders will have to make that decision. Should I do nothing until it gets out of this window? Now, this is a big window. It's roughly 105 to 130. This is really where the question comes in. Do you decide to get out within this window? Do you trail it a certain amount, like we just said? If you happen to be long from lower levels, let's say you bought this breakout, just for argument's sake, and now it moves in your favor for a month and a half, 2 months, and you're just throw a number out there. Let's say you're up $10,000. You might say to yourself, well, if it comes back to 8, I want to book $8,000. If it pulls back $3, I want to get out. If I see 2 red candles in a row, I might get out. Here's the thing, though. You need to determine all of that prior to the trade. You can't determine that after the trade because it becomes then an emotional decision as opposed to you planned to invest a certain amount of money in a trade. And then when that plan came back and you reached your targets, then you could make some decisions. And of course, you could always scale out of trades as well. So we're going to take a look at one more, which is DocuSign. We'll draw these from scratch. And basically, here's the March low that we would use as the level. And you can see this stock also went parabolic, which is why it's been very, very easy to be on the right side of this stock this year. And you can see it went parabolic again. So the question that you're going to get is, do you keep drawing these lines? And the answer is yes, absolutely. So you can see here, it still has not broken the uptrend. So what do? The stock that has gone from $60, roughly $60, what is the level here? $67 to $217 in a couple of months. One of the things that we ask a lot is, well, can you expect to get that same kind of return in that stock? Will you get a stock that goes from $60 to $217? At what point are you trading the stock versus turning it into an investment? And how do you know if that investment is still good? How do you know when that trade is still good? It's a question that you need to ask and need to know what your goals are. Probably the number one question that I get is, should I hold it? Should I be buying the stock more? Should I buy more? What do you think about this stock in the future? And it really comes down to this exact analysis and figuring out exactly what should I be doing now? How do I know it changed? And at what point do I start booking my profits? So I'm actually going to go into Apple, and we're going to actually use Apple on an intraday chart for those of you that are day trading. And you can see why a lot of these stocks have been challenging. So if we draw a downtrend, that's a change of trend in Apple right there. And then it changes there again. And it changes there again. You get the idea, right? All of a sudden, Apple is not the easy, just buy it, and it keeps going up every day. So the point that I want to get across here is very simple. It's not difficult to figure out whether you want to be a buyer or a seller of the stock. It's that window, which we call the potential change of trend, that most money goes to die, where you either overtrade in that window by not recognizing the price action crossed and you have a potential change of trend and now you need to draw the box, or you're just simply trading in there, not recognizing it's in the box in the first place. So if you don't recognize it, you're going to get chopped up, because that's what I call the right price. If you're in a position or looking to initiate a new position, now it's very easy to just sit back and say, well, that's the right price, and until it breaks out of this box, I'm not going to do anything. And that's generally the right position, because you're not guessing. You're letting the market tell you it's ready to go now. The other part of the equation is, if you're in a winning trade and it keeps fluctuating, but it's within that box, you have to have the patience to stick with it until it either breaks out and continues or breaks to the downside and you look to book some profits. It's not that challenging to do what we just did, but here's the thing. Having the knowledge and doing it's not the same thing. So you need to get in there and actually draw those lines. Whether or not it is a day trade or a swing trade, you still need to do it. Now, the question comes back is, well, I could just use moving averages. Yeah, you sure could use moving averages, and I do once in a while. But I will tell you this, I'm trading for 20 years right now, actually going all the way back to 1995, so even longer than that at this point, when I started trading commodities. If you learn to draw trend lines and you learn to actively get engaged in the charts, I promise you, you'll have a much better feel for what's actually going on in your stock, because you're looking at the highs, you're looking at the lows, you're looking when price action actually crossed. You're actually looking at what is the right price, what is the price that it's having a hard time getting through, and you'll have a much more confident feeling when you actually allocate money to that stock, because you did the hard work instead of just saying, I'm going to let the computer do all the work for me. I understand that kind of stuff, but if you're trading, especially if you're trading actively, you definitely want to get in there and know your stocks like the back of your head. So I hope this video helped. I hope to speak to you soon. Have a great day.